In 2008, banks in the UK and across the world suffered one of the worst crises in their history. Trust among consumers was lost. The banks were too aggressive, too self-serving, too focused on the short term. 8 years on, while balance sheets look a little healthier, what banks fear now is far scarier than a credit crisis. Extinction. Like the dinosaurs, destruction will be rapid from an overwhelming force, not a meteorite, but technology. Now, British banks have always used technology to improve products and services for customers. From the world's first ATM here in Enfield to the 40 million mobile banking apps that were downloaded last year. But now banks face a challenge from a totally new set of rivals, ones that have technology at their core. Many established industries have already been disrupted. Consider how Uber has transformed taxis, threatening to put traditional cab operators out of business. So what are the Uber moments for banks? Peer-to-peer lending is one. People and businesses lend to each other through online services that match lenders directly with borrowers. These firms are entirely online with lower overheads and cheaper services. With middlemen cut out, borrowers get lower rates, savers get better headline rates, and the sites themselves profit via a fee. Foreign exchange companies already make it up to 10 times cheaper to send money abroad compared to traditional banking. They've managed to remove all of the charges banks and brokers have kept hidden for decades, and users have access to the real mid-market exchange rate. Driven by new technologies, these companies are not only changing the way that customers interact with banks, they're also changing the way that businesses interact with the financial system. But while fintech businesses are creating real change in the way we interact with financial services, they still ride on the rails of this, the global banking system. These are still the businesses holding almost all the world's money, and they're almost solely responsible for moving it around. Whether you're taking out a peer-to-peer loan or moving your money overseas online, you're still relying on the banks. One of the most important roles of banks is to hold accurate records of how much money everyone has. Without banks, how would you know when I said I was sending you £10 that I was good for it? One solution is distributed ledger technology, a tamper-proof public record of every transaction happening in the world without needing any kind of bank to control it. If person A pays person B, the system knows whether person A has the money and creates a public record of the transaction without revealing the actual balances or details to anyone. The same thing could be done for savings and loans, bonds and shares, almost every aspect of today's financial system. This technology is cheaper, quicker, and even safer and more transparent than current banks. I believe that in 20 years' time, we may not need banks at all. We'll see a wave of technology-driven financial services that will change the way we all use and move money. It's not that the banks can't adapt, it's that the system is fundamentally broken. And while these technologies might be bad news for traditional banks, it could be good news for everyone else. Because this technology revolution will allow a return to a banking system based on values that serve customers better, reduce risk to society, and improve returns to shareholders. And isn't that the banking system we all deserve?